It's a good morning, YouTube family. Robina from Zim here. It is the 29th of November 2023, just before 7 a.m. in Zim where I am. Oh, wow, what an eventful day it was yesterday, isn't it? I did consider hedging, but I just couldn't do it. I think I over analyzed my chart and oh my, I can't even explain it. When I was watching the videos, I think it's Nick Sean, if I'm not mistaken, and he was saying hedging is better than stop losses. And then I looked back at my chart on my tablet and I was looking at price, and what he was saying made a lot of sense. So I thought, you know what? When I go back to my chart on Tuesday, surely I can do this. I will hedge and I will see how it pans out. So even my mom, I told her, I said to her, I'm going to hedge and I'm going to learn how to hedge. And I think if I do that, I will be able to manage my losses. Then yesterday came, the hedging opportunity came, and guess what happened? I lost money because I couldn't hedge. And then I think the thing that really struck me was how high will price go? Because even though it would have locked my loss at $50, and if it had kept going up, it would have given me the profit on the buy. But let's assume it had given me $150 profit. I would have maybe bought or held for $150. I would have had to collapse that buy. Then what happens to the sell? I would have been $200 down on the sell. Yes, the $50 lock, but now I would be down here somewhere, wouldn't I? And I would have to recover this loss. And since I'm learning, how do I then recover that loss? I think this is what caused my panic. You know, your brain goes to sleep when you are in front of the chart and you're looking at price live. When you're looking back at it, it makes sense. But when you're looking at it painting, your brain doesn't function as well, does it? So where hedging is concerned, I'm not sure I will in the future. If I do consider it, I need to make sure I have quite a large chunk of equity for me to be able to withstand it, because if you don't really know what you're doing, you can really get burnt. Looking at price now, let's assume it keeps going up and up and up, and my sell entry would have been down here. At what point do I then recover the sell lagging loss, and where will I collapse my buys? Because if I get that wrong and then price starts coming lower, I'm also in the loss on the buy. So let me investigate hedging for a lot longer. And for now, I think I'm happy putting in my stop losses. I don't mind losing $50. Okay, so I won't be trading the rest of the week, but I will do a virtual analysis of the chart, meaning I'll come in as I would if I was taking a trade, and I will analyze my chart, and then I'll put in my positions and pretend as if I am trading. I'll come back on Tuesday next week with an actual trade if I want to trade, but for the rest of the week I won't. And today I will take you on a journey of me buying material. I've got some material I need to get for some orders that are to be picked up this weekend, so we'll go around together. And I think I'll try to keep my videos as short as possible, hopefully under 30 minutes. Even the trading videos, I'll try to keep them short, under 30 minutes. And the vlogs, I'll keep them short as well. So, okay, let's look at the chart and put my disclaimer out there since we are talking about trading. Please note, this is all for entertainment. It's my trading journal, and I upload, I get things wrong, I reanalyze, I try again until I get it right. So if you come across this channel, please view it as entertainment and not any form of trading, financial, or investment advice whatsoever. Also, I want you to know that I will never engage in direct messaging you, and if someone using my information approaches you, they are likely trying to scam you, so please block them and report them. I will never do that. And all my communities will be linked to this YouTube channel. As of today, which is the 29th of November 2023, I do not have any communities. What I do have is a TikTok account, which I hardly post because I'm busy, and I also have a Twitter account, which again I hardly post on because for now I'm busy. I'm trying to see how to balance my social media accounts, and if I decide to open an Instagram or even a WhatsApp group, I need to make time for that. So for now I don't. So please ignore anybody who is coming to you with my information. That's not me. Also, I want you to know that I trade ICT concepts. I started learning to trade ICT in January 2022, mainly focusing on the 2022 mentorship program and dabbing into the 2016, the IPTA ranges, the central bank dealer ranges, and all those. Still learning. I'm not there yet. This is why you see me making quite a lot of mistakes. But where I am okay in right now is managing my risk, apart from yesterday. But anyways, it won't happen again, I promise. So, right, let's look at the charts. And is there anything else where the important stuff is concerned? No, I think that's it. Okay, so head on over to Michael's YouTube channel, by the way, if you want to learn how to trade. He's got his charts there, absolutely free of charge. You do not have to pay anybody to teach you how to trade. All the information is online and is absolutely free. So go to ICT, my recommendation, because it's starting to price for me is starting to make sense. Okay, so what I am going to do, guys, is I'm going to mark my IPTA ranges. Okay, and this is institutional price delivery algorithm. All right, and IPTA is from 12 midnight to 12 midnight. So let's look at yesterday's range. Let's go up to 12. I use because I trade ICT, I use UTC. Right now it's -5. It toggles between UTC -4 and UTC -5, which is New York time. So you have to change your chart to New York time if you want to trade like Michael. So let's look at our range, okay, of 12 midnight. Where are we? This is yesterday on Tuesday. There we are. That's the first range. And then let's look at, it's not 12 midnight yet. All right. Today that is 12 midnight. This would be our dealing range for yesterday's price action. And then I want to not drop down, but open up my line chart. Remember yesterday I said when I was looking at the line chart, it started to make a bit of sense for me because the line chart doesn't have any wicks. It has the buy side and sell side levels, and they're clearer to see on the line chart than on the candlestick chart. So I want to mark my sell side, which is this low here, right? This would be Tuesday low, sell side. So let's put this color here, and then I'm going to put this down as Tuesday low, sell side. All right, and then let's mark our buy side. As you can see, this is the high so far, and then we'll just incorporate this high because it's within the range of buy side. All right, which is that range so far. So this is Tuesday high, buy side. All right, so we've got our buy side and our sell side levels marked within our IPTA range. Then let's go back up to our candlestick chart. I have to wait for the 12 midnight candle to paint. Then I will mark my 12 midnight candle, and I'll tell you then what I'm looking at where today's price action is concerned. So I'll then mark my 12 midnight candle for today. This is my dealing range for Wednesday, which is today. All right, this traded on Tuesday. We are looking at our dealing range for today, but I need to wait for the 12 midnight candle to paint, which will paint here. So I'll be back. In the meantime, let me get to work, and then around 8:30 in the morning, my time that is, we'll go out and we will buy a few things, come back, go back on the chart, and then that should be it for today. Okay, so I'll see you in a bit. Okay, so the 12 midnight candle has painted. As you can see, it would have been nice if it had a larger body, because the idea is to mark the open and the close price and ignore the wicks and tails. But seeing as we had an indecisive candle, let's just mark the entire candle range of New York open price. And then let's change the color to yellow and let's write that in as New York open price. All right, so now what I need to do is go back into the line chart. The reason why I'm going back into the line chart is because I want to look for internal swing levels within this dealing range. All right, so we've got here this internal swing level right here. We'll change this color and maybe put it at blue. Oh, that's too dark. Let's put it at this one, turquoise, right? And then we'll put this as internal swing level. All right, and then we look at this one here, and this one was respected quite a lot as well during Monday's price action and also yesterday. So let's mark this across as another potential swing level, internal swing level. Okay, so once this is done, we want to jump back up to the candlestick chart, and then we are going to ask ourselves some questions. Remember, I am bearish on the overall market. So because I'm bearish on the overall market, I need price to indicate its willingness to go lower. So since I trade ICT, I know that I'm supposed to sell above open price, which is selling here, right? And buy below open price. So I'll allow price to paint and go up as high as it wants to go. When it's making its way down, it has to trade through the buy side. Once it trades through buy side, it needs to create a CB or an order block within the price leg that traded below buy side, pull back, and then trade below the internal swing level. This here is where I'll consider my sell. All right, like there at my 20 pips, because it looks like price is now willing to go lower. If this doesn't happen, maybe let's say during London morning session, if this type of price action doesn't happen where coming down here is concerned, I will wait and keep on observing price, because price might want to just be retracing and then trade above Tuesday high buy side, come back to reprice it, and then continue up. So what it means right now is, as price paints between these levels, the order block and Tuesday high buy side, I need to wait and watch what price is doing. Only after my London kill zone has painted, which will be around 11 or 12 noon here in Zim, which is just after 5 a.m. New York time, will I analyze the chart and make my decision on where I possibly want to trade direction wise. So I'm watching these hours of candle painting. For now, let's go shopping. Good morning. So I'm back at the office from my shopping spree, and it's just before 11 a.m. in Zim, and this candle currently painting is the 3 to 4 a.m. candle. We still have one more candle to paint, and then we can see where we possibly would be trading today direction wise, depending on whether market is going to paint above Tuesday high buy side, or it's going to go below the internal swing level. So we wait and see. And whilst we're here, I just want to go to my WhatsApp. You remember last time I was speaking about a colleague of mine called Brandon. If you watched that previous video, if you haven't, okay. I think to keep this video short, I won't summarize it, but there's a colleague of mine, Brandon, and yesterday I was talking to him. When I'm trading, I normally talk to him back and forth just for the encouragement. So I was talking to him on WhatsApp, and I told him that I made a blunder about my trade. Here he is. I told him I had made a mistake, and I was learning how to hedge, and I probably lost quite a lot of money then. All right, so he sent me this message, which was quite encouraging for me. He says, Lincoln says, if I'm given 5 hours to cut a tree, I will spend 4 hours sharpening the axe. And he said, so I'm sharpening myself and I'm cooking myself for a 5-minute or 1 hour trade. And I thought that was quite incredible, that even though I am trading and I'm learning how to do this, it's incredible that eventually when I get to the higher amounts, higher figures, at least I have learned how to do this from the lower figures, the $10,000 accounts, so that when I'm ready for the 100,000, the 200,000, $300,000 account, it's now easier for me to do this because I will have come up with a system, a strategy that's cast in stone, so to speak. Okay, so I did promise I was going to keep these videos short, so let me not keep talking. Rather, let's wait for the next hour to paint, and then we'll come in and we'll simulate a trade based on today's price action. I'll do this today. I'll do that as well tomorrow. That will be Thursday and Friday as well. There'll be short videos of simulation because there's something that I want to see. Okay, and I need to forward test this strategy so that when I'm trading on Tuesday next week, I can follow it through. All right, so I'll see you in an hour. Great. Okay, so candle currently painting is the 5 to 6 a.m. candle, and looking at price right now, it looks like it has traded through this internal swing level. So simulating a trade, this is what I would then be doing today. I would put in my limit order, sell limit at 20 pips, and then I would put it just where New York open price is. That's where my 20 pip range is. If price continues to go lower without me, without tagging me in here, I'll be okay. I want to use the New York price range. Humor me, please. So this is what I'll do. So I'll be selling today, and let's see if we'll be stopped out or we won't be stopped out. Limit order placed here. My stop loss at 20 pips within the New York kill zone, time zone, and then I would put in my take profit just below this order block. Okay, let's see, this would be what, 1 to 3.6, so let's put it 1 to 3.1 to 3. Okay, 1 to 3 for today's trade, because since we're using intraday ranges, 1 to 3, there you go. You know what, I'm one of those people, so sorry. 600, so there you go, we're at 1 to 3. Let's leave this and then I'll be back to show you what happened. I'm assuming that I have traded. Voila, we are in. Sell limit, let's go.